So one might have, would have, or should have, or maybe just would have. Yeah, one might have thought, one might have thought, let's go with that Palantir would have ripped into the earnings report, which has not come out yet, Don't get too excited, but it's not. I mean, the stock has just been chilling. It's just been kind of coasting at about 14.75, $15 into the earnings report that, of course, is coming out tomorrow. So instead of this crazy volatile mess before the earnings report, it's kind of like the calm before the storm, at least as of now. Again, we've been trading in a tight range. You guys can see at least over the last 3 days, which has been this week. It's currently Wednesday. Their earnings are coming out on Thursday morning. So you guys can see we've been trading in this tight range between pretty much $14.50 to about $15, 50 cent window. And, at this point on the 5-day, 5-minute, we do have a bit of a death cross, I would say, on Palantir, and it has slowly been making lower highs, which I'm not really liking, to be honest. If we look here on the 5-day, 5-minute, we do have, again, support, like I said, at $14.50, but at the same time, we have lower highs being made. So, yes, we've been trading in this tight range, but subtly, we've been making these lower highs, which you guys know a descending triangle is a bearish pattern. You guys see this right here. And with earnings coming up tomorrow, I mean, look, we might be taking that dump. Hopefully not. I don't know. We don't know exactly what's going to happen, but if this plays out, if the pattern plays out, we could see Palantir going under 14.50. So as a precautionary measure here, guys, I'm going to set my alert, one alert at least, at $14 and maybe 40 cents. We'll put it at 40 cents. Mark is at or below, just in case we see that Palantir move under that 14.50 to 14.40 level. Just in case, guys. Again, we don't know exactly what's going to happen, but as a precautionary measure, we're doing that. And of course, you guys know at this point, we've been talking about this on the channel day after day after day. It seems like heading into these earnings, the technicals have been in favor of the bears on the smaller time frames, larger time frames, you name it. We have to see a legitimate breakout of probably 20-30% at this point for that to change, which who knows, we might get that after earnings as well. Totally possible. But we have a death cross on the 1 hour chart. I'm not liking that. We're under the moving averages. You guys see that. And on the 4 hour chart, don't even get me started, guys. We have a death cross in the making. We have a little mini head and shoulders right here that's pretty much played out. And we're down from $20 roughly to now $14.75. We're down about 30%. So we're heavy in a bear market. Not as bad as it could be. I mean, other stocks are way worse, obviously, but Palantir is on the brink of potentially collapsing, at least on this chart here. I'm not trying to fearmonger or be like, oh, it's going to $5 or anything crazy like that. I'm not saying that, guys, but if you notice where we are, again, 1440, remember that point? That's a point of support here on the 5-day, 5-minute chart. It's also a level of support on this 4 hour chart. The mid-14s, guys, in general, have held over the course of the last, at this point, 4 months, almost 5 months. We're talking 4.5 months, pretty much since the middle of June. So if Palantir gives at $14.40, $14, $13.75, like we've covered before here on the channel, this could see a substantial drop. I mean, I'm not trying to fearmonger. Again, I'm just being realistic. I'm being real. And I play this, or not play this, but on YouTube here, guys, I'm talking unbiased as I possibly can with these charts. And I'm just being real, man. Just looking at this chart, we have a wide open gap right here, down to potentially 10.50, 10.75, $11, depending on how these earnings look and how the direction looks over the next couple of weeks. But realize, if you're in a delusion, if you're in a state of just blocking out not the noise, but blocking out reality at times, there's a wide open gap here, guys, and you have to realize that if you're loaded up on calls right now, if you're in a bunch of shares as a trade and you don't have much conviction and you're like, oh my gosh, I don't know what to do, you're opening up yourself to a potential gap down here. But at the same time, like we've said before on this channel, guys, we do have a wedge as well on this stock. You guys see this right here, and technically we're still holding a higher low at about $14.50, $14.75, now $14 in general. So you could make the case that, all right, earnings come out, maybe the guidance is strong, and we get that bounce back. So for me, the reason why I don't play earnings, guys, is because, well, they're too dang risky. And with stocks like Palantir, these volatile, crazy movers, at least the day that they report earnings, man, it's like a 50-50 coin toss at this point. But, you got to realize the risks. And that's kind of what I'm trying to do here and portray to you guys on these charts, right? It's at a very critical spot here at 1440. So watch out for that point on Palantir. And today, it's kind of, like I said in the beginning of the video, the calm before the storm. We're holding 1450 today. We have been over the course of the last couple of days. Let's see if that continues here moving forward. So before we end off the video, let me come over here to Yahoo Finance very quickly and just see some quick numbers. I mean, we've covered the EPS estimates, all that stuff in other videos. I might as well do a quick 30-second recap in this video as well, but I don't want to get too repetitive, guys. But their market cap right now is $31 billion heading into earnings. Beta's a 2.7, unreal, a lot higher than a lot of companies out there, a lot of stocks out there, rather. And if we pull up their financials very quickly, guys, obviously they've been growing on the top line very aggressively. I mean, you guys know that at $1.1 billion in 2020. Now they've doubled up pretty much in 2-3 years. It's at $2 billion, their top line in the trailing 12 months, which is awesome. And you guys know they're trying to work to be consistently profitable, which is a great goal for a company to have. Hopefully they do get there. I mean, they're pretty much there now. But still, I want to see that for many, many quarters, a string of a nice amount of quarters in a row. So I could be like, all right, now they're finally consistently profitable, right? And on the balance sheet, if we pull that up very quickly, total assets, and of course, you guys probably know, it's a software company. It's a high margin business. They have a lot of cash. They're flush with cash a lot of the time. So their balance sheet is looking very, very solid, right? Current assets of $3 billion. I mean, geez, guys, current liabilities of $580 billion, right? Or million, rather, not billion. So let me say that again. I'm confusing myself now, guys. My goodness. $3 billion of current assets and current liabilities are at $587 million. I mean, come on, guys. Their current ratio is pushing a 5 or 6 right now, which we've covered before, but doing a quick recap here, their balance sheet's pretty good if you're looking at it from that standpoint. And current liabilities, again, $600 billion or million rather, and they have cash equivalents of $2.6 billion. So they could take care of their debt like that if they wanted to. They could take care of all their debt, their current debt, their long-term liabilities as well. Pretty much everything, they could easily do that. I mean, it's pretty nuts if you think about it. And quickly, let's take a look here at the analysis tab before we do wrap up this video. And by the way, if you're finding value, hit that like button. Make sure to subscribe, as I will cover this stock tomorrow when the numbers come out. We'll take a look at their charts. We'll do a breakdown, an update. So make sure you guys subscribe. And we can see average EPS is 6 cents here. Last year they did 1 cent of EPS. All right, so it's going to be up year over year. That's nice. And we can see here the average estimate for revenue, 55 million, which last year they did $470 million of revenue, and that's projected to be up 18% year over year. Not bad if you ask me, guys, not bad. So what do you guys think? Let me know your thoughts down below in the comments, and make sure to smash that like button, and of course follow me on Twitter or X, whatever the heck you guys want to call it, at Stas Talk Stocks. That's linked down below. And if you guys want some free stocks as well, why not go to StasSurFast.com/moo or just go down below. That's also linked down below. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, and you get a free share of SoFi stock as well on top of the 5. And if you fund your account at least $1,000 for a limited time on top of those 6 stocks, you also get 10 more stocks. That's 16 stocks, guys, each up to $2,000. This promo is a no-brainer, so get on it. Use that link down below. And with that being said, cheers. I'll catch you all later.